Welcome to Moving Iron with Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
All right, hello, welcome to Moving Iron Podcast. This edition of Moving Iron Podcast is brought to you by John Deere. Got Greg Machinery, Pete Peterson. Let's talk about what's happening in the marketplace. Greg, how you doing today?
I'm doing well, Casey. How are you doing?
Doing good, man. Doing real good. It's
you have been traveling like a road warrior here.
Yeah, it's that time of the year, man. I hit all shows and a lot of other stuff going on. So next week I'll be down. You and I will be down in San Antonio together next week at Commodity Classic, and we'll see some folks down there, and we do some live recording down there. So we don't get to record together very often. So it'll be a fun trip.
It'll be fun.
Yep.
It'll be fun. Looking forward to it.
Yep, it'll be good. All right, man. So we got a lot of moving parts here. We're coming up on March. March typically is one of the busiest auction months of the year. A lot of pre-year planning and whatnot, and then you roll into the last quarter of the year where you see a lot of things take place. As you look at the marketplace right now, Greg, you watched a couple auctions here that you were pretty impressed with. Talk about what you saw there.
Yeah, a couple auctions as we're recording just yesterday and the day before, Monday and Tuesday, February 16th and 17th. So our friends at Big Iron had a really nice farm auction on Monday the 16th in Brookfield, Missouri. I believe it was the Lane Revocable Trust farm auction. And man, strong prices. I was getting pinged every which way about it as the sale wrapped up. So a couple of the highlights on the combine side, they had a little older, a 12 model Case IH 8120, very nice. It had 1,377 engine hours on it, no heads. So for $230,250, which when I looked at machinerypete.com and our auction prices on an 8120, I mean, that's the third highest that I've ever seen. And it's actually the highest auction price on an 8120 in over 14 years. So, and that's not, it's a 12 model. So it's not like an 11 or 10 pre-def, but again, a super nice machine, well-respected farm type of sale.
Yeah.
This sale was interesting because it had the red combine, but then it had some John Deere tractors that sold really well. So the hottest one I would say was probably the 04 John Deere 8520T, which you don't see a lot of those 20-plus-year-old tractors like that. And this one was nice, 3,043 hours. Came in at $111,000, and that's the second highest auction price in a little over 13 years on an 8520T. Now, again, you don't see a zillion of them, but 111 was, I thought, really strong hard cash there. And then a little newer one, Casey, they had a 14 model 8320R, 1,784 hours. Again, very nice. Came in at $227.25. Which is the highest auction price in 18 months on a 8320R. And then a couple other ones. I thought you might find this one interesting. We talk a lot about draper heads and how that market has been. They had a 14 model McDon FD75 40-foot flex draper that went for $48,750. That's I think all last year, I only saw one higher at $49,000.
Yeah.
So kind of a bunch in that 40, the nicest ones in that 40 to 46 range, but this came in $48,750. Again, it's a 14 model.
Yeah.
And then just a couple construction items, which that market seems to be a little stronger of late. So they had a 14 model Steiger Toric, I believe, 13-yard scraper, almost at 50, 48,750 on that one as well. And then a nice dozer, a 91 model, so it's hard to believe it's 35 years old, but a Cat D6H Series 2, just over 9,800 hours on it. That did $89.25. So again, I think there was a pretty lively sale there Monday out of Brookfield, Missouri.
Yeah. Yeah, that's there's some pretty strong numbers in there for what it was. If you look at what they were looking at, those are pretty strong numbers. Greg, when you're looking at this time frame right now, and you look at March, what are some of the things that you really see over the years that you see during March that you don't see other times? Is it you see I always feel like you kind of got a little bit of everything in March, and it's like any other auction season. But it always felt like to me, if you looked at like combine and harvesting equipment, that seemed like that was one of the most. You saw a lot of stuff in the end of the year too, but it felt like it was more prevalent in this early time frame. Is that typically what you see too?
Yeah, you're exactly right, Casey. March, you do see a little bit of everything. I think when I look at the data over the years, it's still the busiest month in terms of raw number of auctions.
Mm-hmm.
Our data used to show, now this would be back up until about 8 to 10 years ago, so pre-pandemic, even before that a ways, but it used to be, I would write a lot about St. Patrick's Day. It was like a buoy in the water.
Right.
And I always thought that the sales leading up to St. Patty's Day just a little bit higher. And then once you got past that, you started to get all these Saturdays with all the region, every region has 2, 3, 4 big consignment sales on that Saturday, mid to end of March. And you've taken out all the buyers from late February, early March. But really the last 8 to 10 years, I haven't seen that price difference. It's kind of flattened out. But you're right, you do tend to see dealers kind of getting a little active early in the year, and they say, well, let's move 5 combines or 4 skid steers or 8 tractors or whatever.
Yeah.
So we start to see them show up either on their own events or on the online sales and now Econ 101 would tell you more auctions would equal softer pricing, but it tends to be farmers, they're optimists, they have to be to survive every year. So at least across a huge chunk of the country, early March, you're getting that last minute item that you need before the coming season. You're optimistic, dollars are tight, but now farmers not buying as much new, so they want the best used. And I think that's why we see like what we saw Monday there on Big Iron with those good prices.
Yep. Okay, let's switch over and talk a little bit about the supply of supply of equipment on the market. Well, I can't talk, and what that looks like. So if you look at where just the raw number of machines that are out there, like we've talked about this quite a bit, but as you're looking at, all right, you've got this many 1-year-old whatever. So there's 1,200, 300 plus horsepower tractors. There's 1,000-ish. 299 to 175 horsepower tractors. There's like less than 900 combines on the marketplace. There's just a handful of planters out there. You look at sprayers, they're the same way. And the rest of those have really shrank from a long ways down. But as you're looking at sell bills right now, what are you seeing the most pop up right now? Like what's the most prevalent stuff that you look at? We talk a lot about 14, 15 model stuff, 16 model stuff quite a bit. We talk a lot about that early 2020, 2023 model stuff. We don't talk a lot about 25, 24 model stuff. We have seen some of that stuff go through, but it's not near the volume that we've seen in the past.
Yeah, you're right. The 23 models, 22s and 3s, whatever type of equipment. Yeah, there's definitely been more of those flowing through. Like you say, we did see just recently, I think we talked about it last week on the podcast here, Casey, a sale with 4 or 5, 25 model. Oh, there's Machinery Pete's 2 dogs. Mrs. Pete just got home with dinner, so there you go. But and a salad, by the way. Machinery Pete's got to drop a few pounds anyway, so wish me luck. But yeah, the 25s before that sale last week, when I would see one, it would sort of be like, whoa, especially a high horse tractor or combine. So I think like you keep pointing out, you've done such an awesome job keeping tabs on the raw volume per category and by model year. That compared to 18 months, 2.5 years ago, it's so much tighter. And I've been out on the road like you the last couple of weeks speaking. I was down in Louisville. I was in Kentucky again. I spoke in Minnesota Monday. So farmers have a lot of questions, and they're noticing that there's not as much 24s and 5s on the used market, whether that's on the lot or at auction. So it's when they do show up, it surprises me a little bit. Kind of they're tend to be going for a little more than I thought they would, but I think it's a reflection of that tightness that you're talking about.
Yeah. And it continues to stay that way. I mean, if you look at it, no one's I've talked to I don't know how many dealers over the last 3 or 4 weeks here, but there's no one that has high hopes for any big order writing periods for new equipment for 26 delivery, which is going to if it stays the same, we're going to see probably even a weaker marketplace. Now, from my seat on the bus, I like your opinion on this, but my seat on the bus, it feels like we're right sizing the inventory to where for what inventory costs versus where the economy's at versus all the things that are out there. This is the first time in my career where I can look back and say, it feels like inventory levels anyway are aligning with the marketplace. And the more I look at it, the more comfortable I feel about we shouldn't see any huge, blow ups that are going to go out and cause some big ripple in the marketplace. Now, that being said, the price of equipment still as high as it's ever been, and it's not going anywhere, right? It's still the same levels that we see, which I would question even if we were in a different economy, would new equipment be selling like any differently than it's selling now? And I don't think that it would. I don't think it really would. I think we're seeing a quote unquote new normal roll into place where there's other options out there now that you can take a hard look at, and not just on the used side, but on the upgrade side and all the stuff that's out there. There's a lot of different options you can run across. This whole DEF thing that we see coming out now, where how that's going to affect the marketplace with the leading of equipment, and what's that mean and what's that look like? That's going to start throwing some ripples into the marketplace too. We talked about before we started recording that maybe in the back of some folks' minds, some of these auction scenes that we see on this higher or older stuff that we're looking at that's got low hours on it, maybe there's some of that thought process that, hey, I can go delete this now because they've rolled back all of those emission standards from that. And I would think that from a manufacturer level, you would see a similar thing take place there as well. So there's a lot of things in the market right now that are really pointing towards not like some massive scarcity by any means, because we talk about it every day. There's no shortage of auctions going on right now. So there's plenty of equipment on the farm coming this way. There's the level of equipment that's on the lot at the dealership is a good mix, I think, of what's there. So it feels good. It feels like we're in a good spot. But that being said, there's some ripples on the outside that are pointing towards, when this kind of stuff happens, the really, really good stuff gets kind of skimmed off the top pretty quick. And then you're kind of left with the next level stuff. And what typically happens when you get to that next level stuff, it just kind of replaces the pricing of the stuff that just got taken off the marketplace. And you kind of see that stuff start coming up. So looking at this, Greg, what are your thoughts on that?
I think you're right, Casey. I think the whole space as a whole is in a much, much better place. Now, here's one hypothetical for you. This ripple that we're right sitting on the edge, all of us, dealers, bankers, farmers, the whole DEF EPA ruling, it's like, oh my God, oh, okay, that's out the window now? Well, buckle up, Susie. I mean, we're going to see what's going to happen here. But what if this would have happened 2 years ago, when dealers were sitting on that mountain of 1, 2, 3-year-old used stuff on their lots that they sold at auction en masse, where we saw the 150% jump in 1 to 3-year-old stuff at auction in 2024. I think collectively, to your point, dealers, you maybe wish it was a little lower, but it's like, okay, it's back between the buoys. And so now we get this ripple with DEF, and you could be right. I mean, like take that 8320R, that 14 model that just brought 227.25 on Monday. So that's a 12-year-old with under 1,800 hours. So whoever bought that, maybe that was part of the equation. Like, even whatever I got to spend if I so choose to delete that now, what am I left with? I have a 12-year-old deleted low-hour premium piece with the price of new still up here. So it'll be fascinating to see all the way from the manufacturers to the dealers to the farmers how we wade through this, because it's new. It's never happened before. But I would say this. when Wall Street people, like hedge funds and investment pools of money, have been asking, they always ask me, hey, Machinery Pete, what's happening on the used market? Because what they want to know is if the used market's going to be a drag on condition for new sales. They want to know when sales of new are going to take off. One thing I've been telling them for about a year now, and we talk about it a lot, is when you look over the edge of the rainbow, because what's right in front of us now, Joe Farmer, like you said, the mindset isn't there to go buy 5 new combines and buy a bunch of new stuff. It's just it's not happening. But because of this tightening, which you're monitoring, and because of the strengthening auction prices we're seeing, I think it's almost potentially a little dangerous situation if you're a farmer to sit back too long and let all this sort itself out. Because if the ticking time bomb in there is corn and beans. And if they go up a little bit and stick, what you're going to have is that you're going to have a lot of farmers who haven't bought much new equipment for a long time and need to update their lines, and manufacturers shut her down. Plants are shut. Starting to hear ripples about opening. But, you could giddy up pretty quick there, just like we did in 21. So I'm a little worried about that on the farmer side. Now, if you're a manufacturer or dealer, that's probably a good thing, because we don't have as much new stuff stuck on the lot as 10 years ago, and we don't have as much used as we did 2 years ago. So we're sitting better. The whole system it's more efficient. And again, I think on the farmer side, you really got to pay attention to that, because it's not like it was 10 years ago, I don't think. Now, all that said, now we just dropped this EPA ruling on it, so it's like Katie bar the door. How is this going to start shaking out? But what are your thoughts on that, Casey?
Well, I think as you look at things, how they're cascading through right now, there's demand on certain levels of used equipment. There's no real demand on the new side of it either. So you have this like the stagflation-ish type of thing going on in the marketplace right now, where there's not an overwhelming large demand for used equipment. There's hardly any demand for new equipment right now. And if you watch those things out, you're not. It's just kind of there, right? There's just this flatness that you see happening.
Something you said earlier that was very true. You mentioned, like, when you skim off the best quality of the used stuff, like we talked about on that big iron auction. That stuff, it was super premium stuff and it got premium prices. One data point I saw develop all through last year, 25, into the first 2 months of this year, is nice condition stuff, but has higher hour. And it used to be the auction price would be in here. And since we've started to lift, if folks follow me on social, they maybe have seen, I read a note like, okay, that was the highest auction price on an 8235R or a 290 Magnum with over 3,500 hours, highest auction price in 33 months. So it used to be with those hours, you wouldn't get that lift, but because the lower hour stuff has kind of started to lift, it pulls up, but it has to be good condition. If the condition is kind of so crummy, then, I compile that data too, so you can swim in around and see how that, continues to slide lower. But I do watch the good quality used. Is that trend lining up? Is it down? And it's definitely been strengthening, as these recent numbers kind of attest to. And actually, yesterday, as we're recording this, Tractor Tuesday had an online auction. They're kind of a new play, no fee for the seller. But they had a 21 model Fendt 1040 Vario, 1,611 hours out of Luxembourg, Wisconsin. And Zach Bosley, the owner, dropped me a note, and he said, hey, Pete, look at this. We got 294.5. And then I think you actually tack another, the total acquisition cost was 302. Tack on there, the 7,500 buyer's fee on that end. But 302 for a 21 model 5-year-old 1042, that's the number that I was seeing back like 2 years ago. on that type of a tractor. So it hasn't sunk, it's held. And so I thought that was interesting.
Yeah. Yeah, and I think that's what we're going to see continue to happen. Like, it's not a lot of the stuff that we see out in the marketplace right now is going to continue to track the way it's been tracking, and it's going to be the stuff that's bringing big money right now is the stuff that's in really good condition. It's got freakishly low hours or something crazy like that. That's driving that space. What I've found in my career doing this is that once that good stuff gets kind of wiped off and it becomes fewer and far between to find something like that, when those machines do pop up for sale, that's when they really start to pop, right? And you really see more like you're selling just if they're selling for $250 today, they're going to be selling for close to $300 in 6 months from now. But again, it's the demand that we see happening for those is not necessarily as a whole. It's just hey, I want to upgrade my tractor, but I'm looking for something specific, and I'm going to wait till I find that, and when I find it, I'm going to pay for it. And I think that's
and one thing that's you're right. And one thing that's helped farmers wanting that, and because they aren't buying new, so they want that nicest used. And one thing that's helped is on the top end of this K-shaped economy, you got farmers. I'm 60, you got farmers who are 75, 80, whatever. We're seeing a lot of true retirement sales, and it's like old dudes like me and older would maybe choose to keep farming, but maybe just deciding, I think it's time to stop the equity drain. And what they have, it tends to be a lot of well-positioned, really nice used equipment. I mean, if you're 78 years old and you've had a great farm career, that's why we're seeing a lot of these, like that sale on Monday in Big Iron. You see a lot of sales like that with a 14 model, something with low hours, or that 12 model 8120. Because farmers, they're smart and been reading my column for 35 years. They know a 10 plus year old with low hours, that's what everybody wants. So if I can get my equipment line structured so that I have that stuff, that when it comes time for me to drop the mic and retire, you're going to get premium prices. And that's what a lot of smart farmers do.
Yeah, for sure. Yep, for sure. It's an ever-changing marketplace, and there are a lot of moving parts here, so a lot of information to pay attention to. So great place to stop. Folks want you to come speak at their event or come to their auction. You just go to machinerypete.com and look you up there.
Yeah, drop us a note there, or hey, come down to Commodity Classic in San Antonio next week and hang out with Casey and I. We'll have a lot of fun down there.
Yeah, that'd be a good time. So, well, Greg, appreciate you being on. We'll catch you again next time.
Sounds great, Casey. Have a good week.
All right, stay tuned for more Moving Iron podcasts after these messages.
Well, there they are, mocking you. See you next year, loser. That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast. Got Sean Hackett on to talk about what's happening in the marketplace. Sean, how you doing today?
I'm doing good. Doing real good.
Good deal, man. Sean, you've seen a little bit of movement in the marketplace back and forth. I know Trump and you've been talking back and forth, and you've seen a few things come up there. As you're watching the situation unfold, what's your best synopsis of what you see happening there?
Well, when it comes to grains, obviously the president's tweet, that China's relationship, well, let me put it this way, Xi's relationship with Trump has never been better. He's planning on going to see him in April. Besant's going to have a lot of preparatory meetings with the higher-ups ahead of that meeting. And, of course, soybeans have caught a bid, and generally speaking, grains have caught a bid ever since. So you would have to believe he's not going to go over to China and not have something to announce. And I'm sure he won't be able to keep it to himself. So I would imagine we're going to get more positive headlines about the wonderful job that he's doing in normalizing trade with China. So it's eerily similar to what happened the first presidency. It could be a big buy the rumor, sell the news if he disappoints. It could be it's a signed deal with exact quantities again, and oh my gosh, it's bigger than we thought. And now that we're going to buy corn, they're going to buy wheat, they're going to buy cotton. We don't know. Other than I think leading up to that meeting, I think there's tailwinds. I think there's going to be bid in this market. I think you're going to get short covering by speculators, and I think there's going to be some more upside here. And if I'm sitting here as a farmer looking at all the unknowns, I want to be making sure that I got myself 3/4 cash sold on my old crop corn, soybeans, and wheat leading into, and maybe the meeting is, oh my gosh, this is unbelievable. And we have one final spike after the meeting, but somewhere between now and a day or two after the meeting, I don't want to have a whole lot of old crop grain left around. You want to speculate? I'd speculate more on the new crop than I would on the old crop. You got to pay your bills. You got to make sure you're a farmer next year. And with the margins as tight as they are, some of the increase in price we've seen, and maybe we'll continue to see, you have to be opportunistic because we simply can't predict these kinds of things very accurately. And they can change on a dime. Trump can wake up and throws a tantrum, and all bets are off. And you just don't want to be sitting with a bunch of grain, old crop grain that you haven't sold.
Yep. Yeah, a lot of moving parts there. When those, we've seen this before a couple of times already this year. These similar kind of tweets and statements come out. So we'll see what happens with this one, and we'll play it by ear.
My suspicion is that there's going to be some more headlines that they're going to buy corn, and they're going to buy wheat, and they're going to buy pork and like I think there's going to likelihood be a broadening, not just soybeans, but a broadening to some other ag markets, and may never actually happen. But I think that there's going to be some headlines that they're going to do it. This meeting coming up, they're going to talk about it, and we might be able to put more premium on things like corn, which has been dragged up slowly by soybeans, but soybeans have been the one that's had the big move. But I think, maybe like corn and wheat or some other markets like cotton that haven't moved too much, could move a whole lot if we get some additional headlines. Well, like I said, I have no idea if that's going to happen, but it wouldn't surprise me if we get a broadening of their buying intentions, at least for a little while. So,
okay. All right, let's jump over and talk about the weather now. This is we talked about this 3 weeks ago, I think, on the podcast. When this last big cold front came through, it's like, hey, we got this cold front, and then we got one, maybe two more. Looking at March and into the first part of April, how's your? It's warmed back up now for most places. I'm in Florida now, and it's still kind of cold for Florida, right? But it's as you're watching this thing kind of develop, what are your thoughts here, Sean?
Well, let's back up. First, we had like a really, really warm mid-November. Winter's never going to come. Right. Natural gas got crushed, and then we had the coldest period from late November into mid-December in 80 to 100 years in many places, from center east. Then we had a warm up. Winter's over. It's done. It's over. Natural gas prices got absolutely obliterated, and then we had a center east had some of the coldest temperatures in 100 years from the middle part of January and the early part of February. Now we're getting another one of these temporary warm-ups. Winter's over. It's over. This is the third time winters have been over. Third time. And our work says it's not over. We're going to get one more really good, solid push of cold from late month into the mid-late March. I think it could easily be 100-year record cold center east to kind of finish off the winter. And when it's all said and done, when you remember, majority of the heating degree days doesn't come from the west, comes from center east. When you look at it from a heating degree basis, I believe we will classify this winter as a top 5 heating degree winter since 1950. And natural gas supplies, which are now below what they were last year, now below the 5-year average. Normally in March, there's very little drawdown, and in April, you're starting to add injection back into storage again. If we're correct about what we're saying, we're going to see an actually fairly significant drawdown in March. And we think April can be on the colder side, which means we probably don't get much injection in April. we think we're going to be starting the injection season in May at very, very low levels compared to what we typically do. Remember, we started well above the 5-year average at the in mid-November, like well above average. So this then sets the bar that if we go into next winter and we're not able to get back to the 5-year moving average on supplies, and we have another, let's say top 10 cold winter, and all this AI demand for electrical power starts building, and the LNG exports continues to build, and you could see yourself, getting yourself into a little bit of a pickle. And so, of course, they've obliterated the natural gas market yet again because they just are overreacting. But we think in the longer term, beyond short-term volatility, we're setting up for a repricing of natural gas to a higher level. But it ain't easy the way this market trades. It's remember that back in January we doubled the price of natural gas in 3 trading days to talk about how wild the volatility can be in that market. So anyway, nothing has really changed from our winter. The only thing that we're a little surprised about, we know natural gas historically is volatile, but this has been the most volatile pricing of natural gas during a winter. It's off the charts volatility. It's an order of magnitude higher, and natural gas is already a high and volatile market. So I'm not sure why the volatility is as high as it is, Casey, but it's been just way off the charts, and we sort of misjudged that the market would be this volatile, even though our weather forecast has been fairly good.
Okay. One thing you talked about early on in the year when you started talking about winter was some delays in planting because of cold, those kind of things were creeping into that time frame. Depending on where you're at, they're planting already, depending on how far south you are. You start looking into mid-March, early April time frame, that's when we really get the full swing of planting season. As you're looking at that time frame, Sean, what are your thoughts and kind of what are you seeing happen during that time?
Well, anytime you have a cool weather pattern, it means if you do plant, your seeds could sit there for a long time, as you know, and not emerge. Or if they sit for too long, they don't come out at all. So that's the risk. Is a farmer just going to, if it's cold and dry, he's just going to take a shot at it and go plant a bunch. So maybe the numbers will look good, but if it doesn't warm up and you don't get that emergence, you could be looking at delayed emergence and poor stands and all those kind of things. The grain markets are very, very unwilling typically to rally prices during the planting season. I mean, we can plant as you know, we can kind of plant the entire crop in a week or two if we want to. And so, delayed planting, it's very hard to get the market excited. But I do think that if you planted a bunch of corn and we had an extended period of 3 or 4 weeks of cool weather that we're just not getting the crop moving along and we're not getting the emergence, I think that would be something that I think could worry the market. But it's going to take a while. I would think more so that what could get the market excited would be, having no snow cover and catching a quick shot frost in the central northern plains, winter wheat belt, that sort of thing. That's kind of what I'd be thinking about in terms of what could move the dial. The other thing that we want to pay attention to is that we're sort of in a transition year. The weak El Nino is leaving, and we're moving towards an El Nino by the fourth quarter. So right now, I think technically the sea surface temperatures of the Central Pacific just this past week have moved out of La Nina territory, are now back in neutral negative. But the atmosphere is still acting extremely La Nina-like. Southern Oscillation Index is extremely positive. The global angular momentum is extremely negative. These both are La Nina signals saying that the atmosphere is still acting like a strong La Nina. So there can be a delay between what the sea surface temperatures are doing and when the atmosphere is willing to respond. The reason I'm mentioning this is because if the atmosphere stays La Nina-like, it always means a dry spring for the winter wheat belt, especially the KC winter wheat belt of Kansas, Oklahoma, your state of Nebraska. And so that would be something on top of flash frost risks that you could get. You could also have worries about dry weather, exactly when we're coming out of dormancy and exactly when winter wheat is ready to grow at the most rapid pace to put yield on. And so those two factors says to me, if I'm thinking about what's, what might drive the markets this spring for grains, I think winter wheat's the one to watch. If we have plant a bunch of seed and the cold weather continues into April and we get delayed maturation of these crops, that could be something that could rally the market late spring. But I think in more like the next 30 to 60 days kind of thing, I'd be watching the winter wheat market, especially KC winter wheat. I think that's the one that really would fit dry weather and frost risks from what I'm looking at.
Right on. Okay. All right, Sean, good stuff as usual. Folks want to reach out to you, get more information about what you're doing over at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett advisors.com. We also have a LinkedIn page, Twitter page. We just put a couple of things out here the last couple of weeks on some of this weather, this El Nino kind of talk that we just mentioned. And we also mentioned something about a crack-a-boom cycle that we've seen through history. And so those that are interested in these kinds of statistic cycles and correlations that watch your show, might want to tune into those things to get a perspective on where we might be heading with not only agricultural prices, but commodities as a whole.
What's a crack-a-boom cycle?
Crack-a-boom cycle is when you get a combination of, I'll phrase it this way. The rate of change of the world is happening at such a fast pace that
I had noticed, yeah,
that humans are not able to adapt.
Right.
So historically, when you have debt creation and monetary creation at high rates, which we have, when you have geopolitical instability increasing at rates like we're seeing, when you're seeing weather volatility rising at accelerating rates like we're seeing, and you have a technological wave that's creating changes in society at an accelerated pace, which we have. We've seen this. This is not the first time. When all those cycles are creating this incredible rapid rate of change and people can't adjust, then people stop trusting the system. Meaning if you can't get a handle on what the system is doing, then you no longer trust the system. Whether you don't trust the government, you don't trust banks, you don't trust, whatever. And so when you stop trusting the system that you were brought up in, the capital tends to go towards things that are real. Things that are real are commodities, hard assets, gold, silver. Of course, we've seen parabolic moves on those markets. Food becomes something that people hoard, because if you're unsure about what's going on, if you're unable to adjust, if you're unable to make sense of what's going on, then you want to grab onto something that you understand is real to you until you can make sense of what's happening. And so we see this periodically, and it does tend to lead to some of the greater inflationary cycles that we've seen in commodities, going back 1,000 years. And so everything that we see says that we're in sort of the early to middle stages of a crack-a-boom. We have a lot of volatility, big ups, big downs, big ups, and we've seen all of that. But ultimately where it winds up is that hard assets reprice at a much higher level over time. And so with that in mind and understanding that type of process, as a producer, as a farmer, you have to understand that what goes down isn't permanent. What goes up isn't permanent. Although the trend is up, you have to be opportunistic to buy your corn feed when it's flat on its back and to sell your corn when it's going parabolic like it did a few years back. You're going to get lots of opportunities. Right now, the opportunity is on the buy side. We're on the other side. But yet things like cattle are near all-time highs and things like gold and silver are at all-time. Doesn't mean every commodity is on the same volatility cycle. They're not. There's rotations. The tree crops, which, as you know, Casey, had these parabolic moves. They're all crashing. And my view is, and our view is, what goes up must come down. So now we're going to see the energies and the grains rising while the tree crops and the precious metals kind of give way as a rotation. It's going to be rotational type of. That's what a crack up boom is. It's kind of chaotic, and you have to be proactive, and you got to keep this objective. If you let this get where you're just so excited and you're not selling $8 corn, or you're so negative that you're not buying $4 corn, as if you're a last time, you got to be very, very tactical and very objective, and you got to keep your emotions, keep it to the side. Ain't going to help you in this environment, because the market's going to try to get you to do exactly the wrong thing every single time. And it's very, very good at getting you to do the wrong thing at the wrong time. If you understand what a crack up boom, understand what happened in the 70s, understand what happened in the 30s, understand what happened in the early 1900s when we had these types of crack up booms, you'll not be afraid of it, and you'll kind of understand what to expect as we go forward. And so this is going to be a theme we're going to be talking a lot more about as we move into the 2030s. So,
all right, okay. Well, one more time, Sean, where they can find your information at.
Hackett Advisors, HACKETT advisors.com. Our Twitter page is at Faradex11.
Right on. Sean, appreciate you being the podcast. We'll catch you again next time.
Thanks, Casey. Always a blast.
All right, stay tuned for more Moving Iron podcast after these messages.
Well, there they are, mocking you. See you next year, loser. That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like Exact Apply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to the Moving Iron podcast. Got Aaron Film talking about what's going on in the marketplace. Aaron, how you doing?
I am terrific.
Good deal, man. It's been a weird turn of events right now. I mean, if you take a look, we've talked a lot about what's going on in the marketplace as far as inventory goes, and you start looking at how things are shaking out and what things look like. We've talked a lot about the 3 to 5 year old equipment that's coming off the shelf, but you still look at that one, even though there's not a lot of 1 year old equipment on the marketplace, there's not a lot of people lined up to buy it either. So I guess as you're going through the market right now and you're looking at what's happening, what's your experience right now as you look at this 1 and 2 year old equipment that's on the marketplace right now?
Honestly, right now, that's the quietest segment. Ever since we said that, it's been the quietest segment in the day-to-day. Dare I say, 25s are there. I'm not going to say it. They're a long damn way from hot, but 25s are very interesting items. They have a lot of gentleman callers, if you will.
Right. Yeah.
The 3 to 5s are three and 24s too. 24s even into last year were like binging right along, quite honestly. Now we get into, so your 25, your 24, that takes care of your 1 to 2. You get down to your 3 to 5, big old breaks.
Yep.
Then you get after your 5, and once you get after your 5, you're obviously dropped two big old, what I would call hard lines in the sand of buying, your dollar levels. Yep. You're for sure under 4, under 3, you're even under the 250 mark by the time you get in that, 6 to 10. And that is needle moving all day. It's funny, in combines, it's backwards of what you would typically see. In combines, it's a lot of the 3 to 5, and even it's a little bit of 3 to 5. It's a lot of 6 to 10.
Right. Yep.
I forget how many old machines are still out there. How many S6s?
Right.
A lot of S6s out there. And by the time you get to an older S7, you're talking, some guys that they're getting the second combine.
Right.
That's we've got the crown jewel and we got it to a digestible level. Now we need that one.
Yep.
Tractors is 1 or 2. Combines is 5 to 10 is what's been moving. Sprayers, everything. This just everybody watch Casey get all glowy right here. Sprayers is 100% based on tech.
Well, that probably has been, though.
And it hasn't always has been, unless hydraulic wheel tread spacing unless hydraulic tread spacing is considered tech, or a stainless over poly tech is considered tech. Tank.
You look at like Game and
Outback Guidance.
you look at like
That was one of the first off-the-shelf farmer GPS things, and literally did come with a sprayer. So,
if you look at like aim system on a case machine, you look at like Zactify on here. You look at the Raven systems on Agco stuff. I mean, like all these different things that are out there. It's not like sprayers were just like garden hoses out there.
No, I know that.
But they're all that stuff's always been good. I mean, next to a planter, up until here, I mean, planters were always one of the.
I was going to say the planter's the king.
Yeah, and then right behind it was the sprayer.
Yeah.
Everybody had a sprayer system set up a certain way. And 2 guys across the road from each other are going to spray their field for a second from each other. They have the nozzle spacings and nozzle flow typing. There's like all kinds of things that were just going into that. So, I mean, yeah, there's significantly more technology on sprayers now than there's ever been, but it's not like it's a new concept that sprayers are driving the technology in every place.
Right.
But you're right on the, you start looking at the most shocking thing to me if you look at the number of sprayers that have come off the market, or no, I'm sorry, planters that have come off the market, from 1-year-old machines, I mean, all the way across the board, it's just been a litany of machines that come off since December. And I would expect to see some older stuff come off, maybe some like, we're talking like 21, 22, 2020, 2019, 2018 model. I would expect to see that, but the amount of 1-year-old sprayers or planters that have come off the marketplace is another thing that is very, surprising. When you go out and look at just the total number of sprayers on the market, there's about enough. I keep saying sprayers, planters on the marketplace. You could almost have every dealership could get like 1 planter, and that would be the total amount of planters that are out there.
Yeah, but that's a lot more regionally pocketed than the tractor issue or anything.
100%.
Even go back to the, what do we call it, the 12 to 14 planter mess.
Yeah.
That was national. I mean, that was North Dakota, Texas, us, lots and lots of us, all the way to the ocean, man. Now it's like certain pockets of just in the eyes, There's one spot in Minnesota. There's a spot in Ohio. It's not as bad. But what we've always talked about, the bad part is, they're like $450,000 planters, man. That's the problem of that thing just sitting on the lot with all the wires out there hanging out and out in the weather, and oh man, whew, that's a bad deal. But there too, guys love, I'm not going to call it experimenting, because that's literally the wrong word with to use with planter. But guys love to tweak, and that's step one of growing your on-farm tech is the planter, right? As far as crop in the ground, that's the first thing you're doing. And that has always been the one where they're going to reach a little more. So I can see, and I don't have, I take that back. I got some, and we've gotten calls on them now that you mention it. I don't have like 10 24-row planners. I got a couple, and we get pretty regular calls on them. But my tech planners are Dear Orthmans, like DRXs, because they're exact emerge. Everything you can imagine on them, how they're set up, and that's what's making the phone ring. And it's literally, okay, how is this different than this? And what extras does it have over that? That's always the thing. What extras? So another thing I have noticed, when your Kinsey, your Case IH, and your John Deere planter just came to the dealership, this is how we build a planter. Here it is. Everybody was throwing everything on it, still are, and everybody had a different opinion. With the factory stuff, there is way less, oh, I don't want that, or we use something different. It's changed. It really has. And I don't know if part of that is because it's deeper integrated, so it's, less deal, but also it's way fancier from the factory than you ever could have done with your pneumatic press wheels, pneumatic row cleaners. That was.
That's what I was going to say about that is if you look at what the options are from the factory are significant. You go back 15 years ago and it was like, do you want rubber coated wheels or not?
Right.
You know what I mean? It was like that was.
We have straight finger trash wheels you adjust with a pin or nothing. Yeah. Which would you like?
Now you get the press wheel section and the row cleaning section, those kind of things, and it's like
that's over half of the planter book, man.
Yeah, and you can have so many things, and it ranges from $1.50 to $1,700.
Oh yeah, and I didn't mean to answer my own question while I was telling that story, but that's it, and that's because those are the same brand. They're from typically that's out of house deal, and here we go, and it shows up on there. It's just like for the red planter coming with precision on it. That's same thing.
Well,
ours is all in house and all better, right. But it's the same way. I mean, literally, you get that thing now, ISO port, everything you want is already on there, and it showed up that way.
That's what's driving the market a lot of too, is the inside the row unit stuff. That's whether you're talking precision or whether you're talking, Deere stuff. But so much of that is, it's kind of like the tractor conversation, like which came first, the chicken and egg? Is it the technology driving the sell of the tractor, or the iron driving the technology? And obviously the technology driving the tractor. But
what's always surprising to me, Casey, as we're talking about tech on planter, tech on sprayer, the amount of guys that call and ask if a planter's exact emerge because either they didn't see it, they didn't catch it in the ad, because by God it's listed. And is that exact emerge or not? Not a real big deal if it's not. Like that's a big difference. But if that sprayer ain't got exact emerge, click. Like the planter, which is the item I consider at the forefront of tech, and for a lot of years that tech was just whatever this was on the front, but tech is tech. Planter is the birthplace of tech on the farm. That's the way to say it. It's the birthplace of tech on the farm. And it's funny to me that they wouldn't just insist it has to be this way versus the sprayer has to be this way.
So I wonder if a little bit of that question they're asking on the exact emerge side of it, if they're wondering if is it electric drive or is it not electric drive?
Well, and see, almost everything we have is electric drive, at least.
And I think when people ask that question, in a lot of cases, when they say, is it got exact emerge, they're thinking, they're asking you if it's electric driving. And I think that's some of the...
Right.
Some of the...
Right.
Because it's just like, you know how that goes. Like
Which and that's how I always follow that. I'm like, no, it's not exact merge, but it is electric drive. You know, which is in itself is a huge thing. So, and if it's electric drive, I believe that makes it incredibly easier to puck. So
it does.
There's that moving forward as well.
Does make a big difference. All right, man. Last quick thing, as you're looking at the marketplace right now, anything jumping out at you now that we're a month and a half into the new year that you're surprised by, that you weren't expecting?
No, there's nothing moving real hot one way or real ice cold that I didn't expect. As we're here middle of February getting, well, planting in Texas, South Texas, other parts, and everybody gearing up here. Nobody is there's a lot of last minute. You get a lot of guys just telling you, well, we're going to kick this around until we can't and decide. So, and I get it. You know, I think it's back to why I said that last year, and it's going to be that way because interest isn't zero and machines aren't 150. So the two together, wait till the last minute to put that on the balance sheet, and here we go. And especially with all the retirement sales going on, guys have to be careful they don't end up in the nursing home too early.
Yeah, the early retirement sales. Sure. All right, man. Good place to stop. Folks want to reach out to you, get more information about what you're doing. What's the best way to do that?
Well, you can catch High Plains Wholesale, little used equipment gig we got going on social media. You can catch there's a High Plains Wholesale page on Facebook and TikTok. You can catch me. I share the same videos on my X and Facebook, just Aaron Fintel, both places, and on LinkedIn. You can call me, text me, 308-760-1193.
Case Seymour, you can find me, Facebook, X, Instagram, TikTok, LinkedIn, all over the place. Check me out there. You can find me either at Moving Iron LLC and Moving Iron Podcast. You can find me there. You can watch the video version of this over at the Farm Journal YouTube channel, or you can listen to it on AgWebs over in the podcast section. There's some stuff that you can listen to as well on the audio version of that. A lot of moving parts right now. I don't want anyone to think that because of the market and where things are at and the number of machines on the market and those kind of things, that this is going to generate any kind of premium in the marketplace. I am a firm believer in the camp that we're in right now is we have right-sized the inventory to the buying population, and we're slowly getting that in line. And it's going to have a good give and take on the new and used side. So if you look at the marketplace and you say, oh my gosh, there's only hardly any 1 yard stuff out there, that's the only segment of the marketplace that's growing. Everything else has been decreasing. So just let you know, it may not grow as fast, but there's still going to be machines that are coming in. If you look at as we go into 25 or 26 order writing period, 25 order writing period for 26 delivery, you're going to see the same thing that happened last year. There's going to be even less machines on the market then. So it's not going to create a premium by any means. It's going to create a segmented group of buyers that are and inventory is right size for them. So that's my 2 cents on that. Keep plugging our way through that. I want to thank Aaron Fennell for being on this podcast, Sean Hackett, and Greg Peterson. Until next time, let's move some iron, folks.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.